Hello everybody and welcome to this investment update which is being filmed on Friday the 9th of August. I just wanted to talk a little bit about what's happening in the markets at the moment and some of the news reports that you might be seeing, especially over the last 2 or 3 days. First and foremost, just today it's been announced that the UK actually contracted slightly in terms of its GDP numbers in the last quarter. So for quarter 2 of 2019, that the UK economy shrank by a fraction, minus 0.2%. Now the media, of course, as always, is over-exaggerating things slightly and is starting to talk about recession. And technically speaking, if we see negative growth in the next quarter, then that does count as a recession. 2 quarters of negative growth in a row, technically speaking, does put the UK economy into a recession. However, that's not necessarily that important, especially if the rate by which the economy is shrinking is very small. So if we're talking negative 0.2%, 0.1%, I wouldn't be overly concerned with that, especially considering that we had plus 0.5% growth in the first quarter. So year to date, if we take quarter 1 and quarter 2 together, the UK economy is still in positive territory. And of course, we'll be monitoring things over the next quarter and certainly going into next year. But at the moment, growth looks to be relatively subdued, but we're not in sort of panic mode at the moment. The other thing we've seen, certainly in the media over the last couple of days, is the re-escalation of Donald Trump and his trade war against China. Now, this is having an impact on stock markets, not just in the US, but also globally as well. With all of that said, as always is the case, the media disproportionately covers the negative when it comes to the market. So the market fell early this week and also at the back end of last week, and that was widely reported in the media. We did have, technically speaking, the worst day this year on the UK and the US stock market. With all of that said, the recovery has been relatively rapid, and although the markets are not quite back to where they were before, they have been posting positive numbers for the rest of this week. And so, to be fair, yes, markets are just marginally below their all-time record highs, but certainly there's nothing to worry about at the moment from that point of view. Of course, the US-China trade war is a concern economically, both in the US but also globally. There are further talks scheduled, we believe, for September, so hopefully we'll see some positive outcomes from those talks, and perhaps the US and China can start to get along a little better. But for the moment, we're watching things very carefully in that space. And of course, the final thing we have to mention is the B word, the Brexit situation. At this stage, it's incredibly uncertain what the outcome will be. Boris Johnson is widely expected to take the UK out of the EU, if at all possible, on the 31st of October, regardless of whether we get a deal or not, as the case may be. So we'll have to watch this very carefully, and ultimately it's going to be very difficult to get some direction here, I think, until Parliament returns from its summer recess in early September. Of course, there could be further political drama to come. Jeremy Corbyn has promised to table a motion of no confidence in the government when the government starts sitting again in the summer, the end of the summer. So from that point onwards, it will be very interesting to see what happens, and if indeed Brexit does get delivered on the 31st of October. There's some suggestion that Boris Johnson might try to force Brexit through during a period where the government is not sitting because an election or a vote of no confidence has been called. So that's something else that we'll need to keep an eye on as well. Although a deal scenario is still definitely the market's favoured outcome, the market has been pricing in to a certain extent the increasing likelihood of a no-deal scenario. Our own view is that the turmoil, the damage that a no-deal Brexit will do is probably not quite as bad as some proponents and some commentators have been saying, but also that the benefits of a deal are probably not quite as good as people have been saying. So I think we're working on a spectrum here, and the range of outcomes is probably a little bit narrower than people are making out in the media, as is so often the case. But with all of this said, I think from a stock market perspective, it's safe to say that a deal scenario would be the market's preferred outcome. In terms of the numbers, although we've had a few negative days over the last couple of weeks, it's fairly astonishing actually that the S&P 500 in the US is up by nearly 24% this year if we look at the year-to-date figures, and the FTSE 100 is up just over 11% year-to-date. So we've really got some impressive numbers despite the falls we've seen over the last couple of days. And as usual, the media never mentions this. You know, of course, it's been heavily reported that we've had some severe market falls over the last day or two, but in the grand scheme of things, if we put that into context, the year-to-date growth numbers are actually incredibly impressive. That's not to say that those numbers will be sustained necessarily, but as always, it's important to take these things in context. That's everything we've got for now. There'll be another update at the beginning of quarter 4 once we've got the numbers and the portfolio updates for quarter 3. As always, if you have any questions about your portfolio, feel free to speak to me or a member of the Buckingham Gate team. And I do have to add the caveat that investment values and the income from them are not guaranteed, and investments can fall as well as rise in value. Thanks very much for listening, and we'll speak to you soon.